Hi there, welcome to Pyth Wyckoff Technical Analysis session. So I'm going to draw on this raw chart to cover this new coin, and I'm going to bring in key levels as well as the key Wyckoff stages. So if you're new to this, bear with me because I'm going to move across those tags and lines from another chart and put it right here in front of you. So let's get started. If you're already in the community for a while, this is not something foreign to you. So let's start with the key levels. The rainbow key levels. 1, 2, 3, 4, 5, 6, 7. Copy. And then the Wyckoff tags. I don't want this. This may be cleaner. Buying climax. Preliminary supply. Automatic reaction. Second test. Sign of weakness. Last point of supply, preliminary support, selling climax, automatic rally, second test, spring, test, last point of, no, I don't want that, oh my god, just too busy a chart there would be such a situation. So, blind climax, XY, second test, automatic reaction, supply. Just to be very careful. Spring. Test. Last point support. Sign of strength. Okay, good to go. And back to Pyth, that is. SD. Let's pick this. It's got a longer history right there. All the way back to January 2024. And now we're in this week, about to finish this week's candle. Let's paste in what we have copied. First thing, let's get these tags away because they're blocking our view. And after moving this, we can start with our lines. Let's put it right over there. Locking these lines, and let's start with the red. Basically I will put it somewhere around here. Reason, if you're new to my sessions, I would like to see at least 4 reference price points, basically the tips of the candles, whether it's the head or the bottom, it doesn't matter. We've got more than enough. We've got 1, 2, or even 3, there's 1, 4, 5, 6, 7, 8, 9, 10 that we can reference. So that's a good point over there. Price point, that's 0.10. If you want to be exact, you can just double click on the line and take out all those subsequent decimals you don't need. And well, for the red line, it's fine for us not to extend all the way here, but the higher ups, I will extend the line and I'll show you in a minute how you can quickly do it without dragging and making the line not level. So orange, I will put it right there. Well, obvious, right, for you even. We've got 3 candles right there. We see where it got rejected, where it was closed, and then these 2 as well, closing or opening at that point, plus another 4 over here. So that's 9 candles already. That's 0.189. We can make it 0.19 just to be simple, and then here as well. Well, just to make sure after you clear the all those subsequent decimals, the line doesn't go crazily high, because some scales in some assets or altcoins are just way too crazy. You move a mini, a thousandth of a price point, it's going to go beyond those reference points. So just to be careful if you adjust it that way. And then the yellow key level. So this should be a good one. Well, this wick doesn't get close enough, but that's fine. Here we've got 2 wicks and then one tail, one head, one wick, and another head, and like two tails basically, and another two tails. So that's sufficient. So if you want to, let's remove the decimals. But if you want to extend the line, that's where you can do it as well. This is the beginning. So that's 23. I just want to move it a little bit more, so like to the left. So I reduce the number, so extend. So you don't have to drag this little dot over here, because that would make the line not level. So lock it, and then let's drag it down. I think that's a good reference point for key level. Yeah, basically 3 candles over here and another 2 plus a wick, that's 6, and 7, 8, 9, 10. Cool. That's 0.40 or 0.41 because it's 409. Let's do 41. And then also, I don't think it's 20 is enough this time. Let's do 15. And I just want a little bit more. Let's make it 10. Because I want to see what's happening over this side as well. Okay, 10 is good enough. Let's lock it. Now, the light blue key level is pretty tempting here. There are sufficient wicks and heads and tails, so let's do it over here. 0.478, so let's do 0.48 instead. And then previously we already add to 15. I think this has to go to 0. Yep, just where I wanted to land onto. Okay, so there are 2 reference points here, another one, that's 3, 4, 5, the wicks, the red wicks. Yeah, there are basically more than enough reference points. So that's a good key level. And then, well, you can argue there's one over here, but that's just too busy. So I'll just put a green line over there. You can adjust it downwards. Well, might as well. Let's do it that way, because it seems to have more reference points than where I originally put it. Sometimes when you scroll, you will notice. So 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So that's actually a better location. And oh, interesting. I think I put in an interesting number here. I forgot to change it, but then we ended up somewhere near. That's the green key level. Okay, that's 0.39, 0.47, but I haven't changed the text, so that's why. That should be 0.48. Yep, correct. And 0.33, was that correct? No, absolutely. I forgot to change the text. That's 0.26. Yeah, sometimes it happens. If we copy and paste, better check again. 0.19, correct? 0.10. Okay, let's move to the blue. Okay. Yeah, that looks like it. So we are getting to the extreme point or duration of the chart. So it's getting tougher to draw these key levels up at where we are now. So at 0.56, let's change the text first this time, just in case we forget. Remove the decimals. Sometimes because I removed it here, I thought I've done the text also, but that's another tab. So 0 got us to there, so 0 should be fine. Yeah, so you see these bunch of candles all crossing over there, plus this wick at the top. Okay, finally, the purple. Again, not much reference. Probably just 3 points here. Yeah, around 4 to 5. I'll take this spot instead. That's 0.68. And then set it as 0, so it go all the way to the left. And 0.68 that is. Okay, let's lock this as well. So basically, these 2 reference points, these 2 and 3, 5 points over here. So that's good enough. Now, the Wyckoff tax. Assuming because it's a very young coin, at least there's not much history over there. Assuming that's the buying climax. That's arguably a second test, and then LPSY right there. Automatic reaction right in this tiny slot. This can be a PSY or a backup or last point of support. It's not clear because we don't have history. This can be a sign of weakness. Just quick and dirty for a young coin chart. And eventually it came down. It's pretty tricky here, because whether that's actually a selling climax or is that just another LPSY before it goes to the selling climax. That's the decision we have to make while we are trying to decide on these charts without much of a track record. Okay, so my decision would be if that's another round. Yeah, that's totally possible. So that's the selling climax. That's where the preliminary support is. That's the automatic rally, and then a second test. There was a sign of strength right there, and then last point of support or backup period right over there. That was already an accumulation cycle, and then you can consider this a spring as well, right after the second test. So if I switch it to a line chart, it may be easier for you to see these values, right? The selling climax right there. Second test, the spring actually dipped lower than the yellow key level, and that's why I'm going to put it over there. This, we can delete it for now. That can be a quick distribution right there for December 2024, because a lot of other altcoins had that moment as well, where they have gone to a distribution cycle. So this might as well be for Pyth, just that it didn't go as high, and that's totally understandable after the initial drop from when it started. That may be a PSY period. Let's borrow this tag over here. Seems to be. It looks like that's the most probable thing. And then obviously automatic reaction right there. And immediately it already gone into last point of supply, and boom, that's already the preliminary support very quickly. And eventually selling climax. Automatic rally right there in mid-May, and a deeper test. Now, end of August, looks like a sign of strength to me. It challenged all the way to the yellow key level of 0.26, so that's a positive sign. Where we are now seems to be the start of a backup last point of support period, much like what happened back in October 2024, all the way when the price gets to begin with the new distribution cycle in November 2024. So whether or not this time would be the same and we are going to see a new buying climax, according to Wyckoff pattern, that may be the case. However, don't be excited too early, because after sign of strength, a lot of times this period doesn't immediately happen, and we're still early, so we can't tell exactly whether it is really forming a platform, much like what happened here. We've just got two candlesticks for reference. Because the other way things can happen is, let me enlarge so it's easier for you to see. If it doesn't form a platform, what would happen is for the price to come back down for subsequent tests and then accumulate further before it goes into a new distribution cycle. That's the other way things can happen. So don't be 100% certain that this is the platform period before the climb to the new distribution cycle. And one more important thing is, for these kind of scenarios, if it has lower and lower peaks, if this time the buying climax is lower than the green key level, from a long-term perspective, that's not something we should go in. However, or like how much love you have with this, I don't mind if you keep one or two like minor portion just to keep it as a memorable item or souvenir, but then like being a diamond hand, if it doesn't show a peak somewhat close to what happened back in December 2024, it just doesn't worth it. So that's the big picture. Now let's get to the daily. So what's key here is you see the Bollinger Band counter squeeze I've turned on. I switch off the drawings for the moment. A squeeze happened back in October 2024. That's right before, like right at the end of the platform period, and that's what swings the price up. So the squeeze force pushed the price up, but then after the peak immediately fell back to the other end of the Bollinger Band. So there was another squeeze here, and it's basically keeps the price, like squeezing the price down to the selling climax. Now we have entered another squeeze. For me, I would consider the squeeze started back in mid-June actually. We are already well into this squeeze, and here there's sufficient squeeze force to swing the price well, hopefully to the upside, because it's been at the lower half of the channel. It did happen a bit, release a bit of squeeze energy, but if it continues to trade sideways, like the platform period over here in October 2024, that the subsequent move is what we're hoping to see. As of now, it's not definite yet, and it's like at the upper half of the Bollinger Band as well, so it's a bit tricky whether the price is really going to swing to the upside or like the other way around. So even though if you're optimistic, don't forget to set your stop loss, because these young coins can go quite crazy. Now let's get back to the drawings, the Wyckoff tax. Oh, sorry, that's what the weekly I was talking about, but like that's where the big swing would be triggered. The daily, yeah, the squeeze happened and the force has been released, and now we're consolidating again. When the purple gets into the orange lines, that's when another round of squeeze may happen. So you see the squeeze, and then boom, next day, October 28th, it went crazy, and now it has returned to the center line of the bands basically. So let's switch off Bollinger Band counter squeeze. Let's get on to Wyckoff once again. So let's borrow something from Doge. Buying climax, automatic reaction, second test, sign of weakness, last form supply. First, maybe let's borrow that. And second test, selling climax, automatic rally, sign of strength. We don't have preliminary support, so let's get one from here. Preliminary supply as well. Well, we use the LPSY and copy it over. So let's go back to Pyth. We were with Binance. Okay. Those are the tags. Assuming that's the buying climax right over there. Yeah, there's definitely automatic reaction. Not this one. Yeah, it's this one. Automatic reaction that hits the light blue key level, and second test subsequently, and boom, it went all the way down. That's sign of weakness, last point of supply, and eventually a bunch of horizontal trading. You can tag a multiple LPSYs or SOW over there, but that's seems like what it is. Now the tricky part is this bunch of things over here. We can call that the preliminary support period. That's a bit of horizontal trading before the selling climax. That's the automatic rally. The tricky part with putting Wyckoff in a daily chart, which I don't prefer to, but some community members want to see Wyckoff in the lower time frame, so that's why I'm putting it here. Is because in the daily time frame, it's just not the timeline, the big whales or the market composite man it's working on. But for fun or for study purpose, that's interesting still. Again, that may be a second sign of strength, and then eventually we've got more tests, or you can call that a spring. I'll just put test to make it simple. This, it can be a backup last point of support period. Whether we call this another sign of strength, that's another issue. So because reason why I'm saying this is the PS is this period basically for me, and I was trying to figure out whether I should put the selling climax right there or here, because I can put it here and that's where the automatic rally was, and that's just basically a second test. These I won't call those sign of strength. I'll take out this one at least. This is a marginal case. This is what I would consider a sign of strength if this was the automatic rally. So if this looks better and more reasonable, I'll keep it that way. Just that there were more tests, so I'm not going to like put every single one there. It's going to be just too busy. Up first, nothing over here, so I'm going to delete it for now. So that looks kind of alright to me at the moment. And if we really are at a late stage of accumulation, then after this period, when the Bollinger Band curl and squeeze, you see the purple lines are quickly consolidating towards the orange. So you see it's like a clam shape happening. So it can accumulate quickly at this level, and then, hopefully it doesn't come to retest the red key level, but go challenge upside as well. We can cross-check this because the daily is basically governed by the weekly. So weekly we already see that the squeeze is going on. So if that's really the case, the squeeze continues and eventually releases the force or the pressure gathered at like between the red and orange key levels, then hopefully it's going to swing the price up because it jumped the gun 2 weeks back in late August, so it might as well go for real this time, but maybe we're still early. It may still want to get like consolidate for 2-3 more weeks, similar to what happened back in October last year, before it actually takes off. So there's no, I won't say there's a definite time frame for now. While I can definitely draw a line for you, but the way I already see it's way down the line in terms of time. So instead of 89, I'll move it to 95, just to extend this longer. Because I have to draw a line that crosses this key level, then we can see the possible breakout timing. So I'm going to draw this line right there. And then make it the dashed line in white. That's not even like touching it, even I extend it. Let's do 105. Not enough. 115. Okay, that's where I want it to be. The other guys, also 115, but I'm not going to waste your time here. I'm going to add them later. So basically that's where the line is crossing the key level. If I use the wick instead of the tail, that's even further down the timeline. So somewhere around this point. When is it? That's March next year. Assuming the price continues to trade without breakout along this ascending triangle. By first quarter or late first quarter next year, the breakout will eventually happen. But then don't always follow a textbook definition of candlestick patterns like the ascending triangle, because there are exceptions. So while you hope for an upward movement, combining the like ascending triangle plus the late stage Wyckoff method, and still always set your stop loss just in case the whales are making it moving the other way. So I think for such an like a young altcoin, while it's interesting to examine it using various methodology, including Wyckoff, the candlestick pattern analysis, as well as Bollinger Band corner squeeze, which all points to that an upside movement is on the way. However, the macro environment, maybe economic or geopolitics, or even the crypto industry, it's all like factors affecting whether this can eventually happen, because it can consolidate for 2 years long without even going to a distribution cycle. So even a sign of strength has happened, don't think it's the very end of an accumulation, because sometimes it will just take way longer. So thanks for joining me today. Hope you like the new sessions of Pyth and also Peak. I'll continue with this roster arrangement where I'll like have some fixed roster plus some trending coins or most visited coins on CoinMarketCap and CoinGecko. So if you want a coin to stay within the roster as a regular, like a starting lineup, then please comment or like so I know that more people are interested in that particular coin, and then I'll keep those in the starting lineup instead of pushing them onto the bench.